Chicago time on Wednesday, the 21st of April, 2021. Hope you're doing well. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're on episode number 1977. Give me a sound check. Let me know how I'm coming across. We're going to dive right into the conversion trading pre-market summary sheet here. And we're looking at a market that is neutral-ish to risk-off. It's really mixed. Gold and silver leading the pack. This morning we see ETH popping higher today as well, and the laggard is crude. Crude is off $1.67, down 2.66%. So overall, a mixed bag in the middle. We have the Euro stocks out of all the indices. 1 second, let me clear my throat. Out of all the indices, the Euro stocks are the only ones that are higher. The Russell almost unchanged, and the Dow down 47 points, 0.14%. The S&P is off 7.5 points, 0.19%. The Nasdaq's off 46.5 points, 0.34%. Not much to say here, other than interesting. Not much to say here other than the fact that overall we're just not going anywhere. We're trading right in yesterday's value in the S&P. We'll take a look at that in a moment. Something's up with this summary sheet here. 200,000 contracts traded in the S&Ps. The overnight inventory is 36.4% long. I need to check what we have on the sheet here. I think overall, I think it's correct, but anyway, approximately 19 points of range. So the summary of it is risk off, really sideways, didn't accomplish much in the overnight session. We'll look at that in a moment. As far as the expectation yesterday, we got the primary scenario was looking for a push through the 48-52 areas. We discussed quite a bit yesterday for a test of 58. For a test of 58, if it pushes through 48 and holds bid, the expectation was that it would test 58 pretty quickly and then move all the way up to 41.66, 67. We didn't see that. What we saw is the secondary push through 48 by a little bit right in here, turnover, test the 31, and get to 23. 23 being the key target for the last 2 days. All selling is likely to push to 23. And of course, 23 is currently in play. The market is back into the major balance here. Below here, the next big balance area is 40.67, 40.67. Beneath there, we push into 39, the 39.86, 85 area, something like that. So we're doing what's expected per our auction expectations. Here's what it did yesterday. Here's how things looked yesterday. So there it is. Now remember, let me bring this. See this pixels per bar set to 3, and all of a sudden we have a day that takes up half the screen. This is kind of a weird way to measure volatility or rotations. It's not scientific, but I like to keep my chart in this 3 pixels per bar range on a bar chart. And one of the things it tells me is how much action there has been compared to, say, last week, where we had 3 days showing up on one screen. And the weeks before that, we had 4 days right there, 4 days of trading showing up on one screen with the same pixel resolution, bar resolution. It's just kind of a silly rule of thumb that tells me how much rotation there's been or how much activity there's been. But what we did is we opened up, we immediately tested and put in a double bottom on this week low at the prior day's low. We went up through the 48, remember the 48 to 58 area. We went through the 48 to 50, 51, and then we came back through holding the mid and VWAP before releasing to the downside, looking for 41.31, the overnight low down here. But really, once it starts to release itself to the downside, now we're looking for some place to get in on the pullback, and we got a nice clean entry there at 41.50 against the 41.75. This, of course, is not the entry price. The entry price is down here somewhere, depending on the consolidation, looking for the pullback breakout to the downside, and then looking for it to push to where? To the 23, right in here. To the 23, and then our target's been hit. Target we've been talking about for 2 days is done. And then from there, it bounces to 29, 29.50, and then it releases to the downside. Now, the expectation, if you recall, let's go back to the expectation is that it is not likely to stop at the level, right? It's not likely to stop. That's not a horizontal line, but it's not likely to stop in this area. Why? Because it's an MC point of control. An MC point of control, volume point of control, means the market has acceptance. So in general, we don't come to acceptance and just bounce off of there. It does happen with points of control, the prior day's point of control or something, but an MC point of control is describing an area that the market is accepting value in. And so in general, what it does is it pushes in, consolidates, pushes through, consolidates, comes back up and through to the other side, consolidates, and then we end up getting caught in this zone. And that's basically what has happened here. We're basically caught in this zone. And you can see it built a nice profile we've built a nice profile, composite profile in that area, and we have a nice little zone here of acceptance going all the way up to 41.31, which was yesterday's low, overnight low. So we're holding this region. Yesterday we ended up with quite a bit of confluence here. We had a stock zone at 31. We had VWAP, full session VWAP, RTH mid, and RTH VWAP all in that region for this test of 41.31. I also had a setup for a long, counter trend long, looking for a push into this area. But the better setup was the short off the mid, which I've talked about quite a bit. Most of you who have been here a while know that setup. Short off the mid for rotation back down to 41.1975, and that went to the tick basically right into the close. And what we ended up doing is leaving a double distribution profile for the session, leaving us this 35 area to watch. This is the area to watch above. And so there's a stock zone there, and we are basically trading in this fat MC point of control zone. That's what we did. Yesterday, we saw some pretty decent buying on this. Once we got through the MC point of control, we saw some pretty decent lifting in the delta, which is expected, and then that carries us into what we've done so far. Again, for those who are not familiar, the dark gray areas are the RTH session. The light gray is the extended trading hours. This is actually a 15. I switched it for a study yesterday. Switch it back to 30 minutes. And so this is yesterday's action. This is the overnight action since it reopened, and we've traded 205,000 contracts. And look at what it's done. It's pushed back to that 41.31. It pushed through to 32 and a quarter. But you know, we're not. This isn't NASA. We're not looking for that much precision. So we've pushed through to 41.31, and we have failed in the overnight session to overcome it. And what did we do? We ended up building. We had the point of control up here for a bit. It shifted down, but we ended up building the same profile we had yesterday. We ended up building that overnight. So you could see the mirroring of yesterday's trading in the afternoon and the lower distribution in the overnight session. So to me, this looks weakish. We're not able to get above the mid. We're not able to get above 41.31. We're not able to push higher into the singles that we left behind at 41.41. And so it looks overall weak. The expectation is, because we've been putting in lower highs, the expectation is today is likely to put in a lower high, lower low yet again. And then that brings us into a really important intersection of levels here with the weak low, with the weekly low. This could end the one-time framing up on the weekly, test 4,100 from above, and then if we test 4,100 from above, it is not likely to hold. We may start seeing ourselves pushing below into 40.80 and then ultimately 40.67, and I'll show you where those numbers come from. So the overnight session has pretty good volume, not much range, but overall, if we break this 106, the weekly one-time framing, so the higher weekly lows, so these weekly lows, each one of these boxes is a week, are now breached, and we're not holding value at 23. We're not holding this 21.50 anymore from 2 weeks ago, the high of 2 weeks ago. And if we breach this 106, there's very little in terms of volume to hold this thing together at 4,100 or to help it remain above 4,100. And then we make our way to 40.67 quickly. That is the next balance point. So we move from balance. Remember, the market generally moves, you know, unless it's making all-time highs, which I don't like at all. It's good for an investment portfolio, not great for trading. It moves from balance to balance to balance. It moves from balance to, you know, a high volume node to a low volume node to a high volume node to a, that's how the market does its tests. And so it brings us down into the 67 area. If the 67 area cannot find buyers, if it's not low enough to bring buyers in, then where do we go? 40.38. 37.5 is a gap area. 40.38 was a battle zone, and that opens up 40.14 to fill the gap zone. We have very weak structure here and completely untested area between 37.50 and 14.50. And then that takes us very quickly down to the major balance down here at 39.44. Now, I'm not advocating that we should all get short, and I'm not a bear, and I'm not pushing for that idea, but I have to read what it's telling me, and what it's saying is, you know, we could see the topping action last Friday. We could see that it was weak-ish. The high was not a very strong effort by buyers at that 41.83, and incidentally, this 41.10 is the 50% fib from 40.3750 to 41.8350. The 50% pullback is yesterday's low at 41.1050. This is another reason that if it breaks through, we're likely to see it flush through the 4100 and back into the 67. If we do push away, and notice what we did yesterday, we built balance right on top of the 41.23. This isn't a coincidence. So if it does not hold this area, this 41.23 zone, 31 all the way down to the low, 41.10, and if it starts pushing through 31, then we're looking for 41.48. I'm looking for a long, and I'm looking for 41.48. If not, 41.52, take out yesterday's high, or 41.51, take out yesterday's high and start driving back towards all-time highs. Do you follow the narrative? It's so important. The whole reason I've been doing these Trader Bites, almost 2,000 videos, is to help traders see, traders see that it's not about getting in, finding an indicator, and just trading an indicator unless you're an automated trader. The idea here is that you follow the narrative. There's a story here. It's kind of like being in the tableware sales business. You have to follow the trend of the market. You have to follow which players came in, which players went out, what styles are in, what styles are out. You don't just show up and say, oh, they're selling this kind of tableware, I'm just going to make the same thing. Well, good luck with that. There's a story, and that's what I'm after here, and this is why we keep referring to this composite. Anyway, this video is getting really long, and I know I'm preaching a little bit here, but you got to watch today. You got to watch your 41, 31, and so on. Let's move into the current action. Let's take a look at what the plan is for today, given where we are and what we've done. This is the rounded top that I had talked about. This is the rounded top. It takes a long time to form a rounded top. Do you see that? Look at these points of control. Climb, 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 peak, lower point of control, lower point of control, lower point of control. Now, so far, lower point of control. This is the rounded top. It takes weeks, sometimes takes days or weeks to make that happen. So don't lose sight and say, oh my God, this thing is never going to sell off or whatever. It happens over a period of time. It's failure over a period of time, and then it starts to accelerate the other way. You know what that's like? That's like when you throw a projectile into the air. When you throw a ball high up in the air, it doesn't just hit a glass ceiling and turn around. It loses power and makes a rounded top, and it comes back and it starts to accelerate to the other side thanks to gravity. Thanks to gravity, we have that pull, but thanks to stops, market stops, we have that pull in our business. But this is what we're looking at. In fact, I wanted to go over the map so far. The map is quite noisy. We have quite a bit of noise here. Looking up and down on the map, we have 41.35. This right here has been sitting here a while. All day yesterday, we've had that offer sitting up there, and you can see it's a large block. This is MBO data. And you can see there's a large block in here that has not moved. I expect this, if we get back up above 31, I expect 35 to trade out. And there's a huge block. Not huge, but there's a large block, contiguous block in there, a block order. And then looking below, we're back down to 41.05, which has a pretty decent sized block in it as well, in the bid, mixed into the bid. So other than that, there's not much there in terms of price action or the heat map to gain information from. Here's what I'm looking for today. We're opening on top of the overnight point of control. We have the mid and the full session VWAP, full session mid above us, and I'm looking for it to be responsive to the upside. I'm looking for an attack on this 31 early in the session. I'm looking for this to peter out, fail, and then I'm looking for a lower low and for us to push through the 41.10 from yesterday, the weekly low, and I'm looking for this to accelerate. We'll likely bounce and accelerate through the 4100 for a push to 4093-ish. 4093-ish on this. So we have 4089 as a pretty decent area here. I know I went long today, but there was a lot to cover. And then 4099 is the key targets down below. I'm not sure why I'm putting in the 40 handle, but and then above, we're looking for that 31 is really important. 31, 35. And if we get through the 31 that I'm looking for, 48 up here becomes the next key area. The secondary scenario, an open chop, push through, get through the overnight low, get us the overnight stat, move into 4110, consolidate down here, might poke through, consolidate down here, but watch out for that impulse higher, consolidation at the overnight point of control, and then start the squeeze show and get us into the singles from yesterday, 41.41 up here. That's scenario 2. Expecting the trend to continue lower as the primary scenario. I got to follow the daily trend. The weekly trend is much bigger, of course, and is still bullish, but the key areas to watch for reactions are 31, 35, 41, 48. 31, 35, 41, 48 above, and then below, of course, the 10-half, the 06, and then we're looking for 99 and 89 as potential test areas below. Okay, so that's where we stand. Good luck today, and I hope you gain something from listening in. Take care.